Happy Friday. We took a trade last Friday on IWM. It pushed to about 35% on Friday, but immediately reversed after that. So we had that big down day right over here on Monday. We've been pumping since, and now we're back at the mean, right? We broke above the 20, looking strong. This vertical pivot line right here, this trend line, was really hoping that it was kind of, it had done it 3 times, but it never did. In fact, it held good resistance, fell back down, and we're still underneath it. You could see it is a rising vertical trend line. We could see it get challenged again, but we'll see what the overall market looks like. So today, IWM is down. SPY, on the other hand, is looking really constructive this week. If we create a trend line with these two weeks right here, you can see just coming right up to resistance, and it's failing again today, coming right back down to the mean. So this will be interesting to see if we could actually follow through, have some follow through to break out of this resistance zone, or just keep hitting it and coming back down. At a certain point, price levels get exhausted. How many times is it going to hit it before it says, okay, we need a heavier pullback? And if that ends up happening, then, next week we could easily go down to 593.64 as the low, but the midpoint for being around 602. Right now we're at 602. Depending on where we close today will determine this weekly expected move indicator, which will then give us the levels of our high at 611 or a low in the 593 range. Let's look at it. It's amazing. I thought I did that on SPY. Looks like I was looking at this on the Qs as well. Also coming right into resistance with a pullback. Huge pullback today. This morning, it was looking pretty good. We gapped up this morning. Looked like we were going to break out, but we did not. We actually just hit resistance and did a pullback. Now we're underneath the 20 on a 15-minute. Still have good momentum. The weekly looks good, but on a daily, we're still above the zero line. This could recover next week, but it looks like a reversion to the mean. After that big drop on Monday, we had 4 really good days, and today's the pullback day. And where did it pull back? Right at that resistance line. So really looking at resistance, holding. We just have not been able to break through some of these levels, even though we had a nice recovery this week from Monday news on tariffs, right? So at any time, we can get any type of tweet could completely change the landscape. DIA suffering with its momentum on an hourly. Let's take a look at a daily here in comparison. It actually broke through its vertical trend line. This actually really looks good, but ended up breaking below, and now we're staying below. Typically, these support or resistance lines tend to be fake out zones, as everyone is hoping for either momentum or a failure at those levels. And as you can see, we're just kind of hanging out there, but you could see this rising 20. So if momentum can stay above the zero line, this looks a little drastic here, doesn't it? If we could stay above the zero line and stay above that 20, we do have an opportunity to not only come up to the last pivot high around the 450, 153 area, but we can then finally break that level. And when I say finally, if you look all the way back, you can see that we're at a double top since mid-November. So look at that beautiful pattern on a double top. Looks like it came down for a higher low, but another double top. So I have to wait and see if this just kind of crests this vertical trend line and then finally break it. That would be the slower way to do it. If DIA can gain some momentum here, we could see a pop, but this is a drastic down slope for momentum. So really kind of looking bearish here. And on the 4-hour, you can see that we're breaking below the 20. We've just broken below the zero line. So on an hourly, you can see that we're already the oversold level. Typically speaking, when you have momentum kind of hit these extended levels. And in this one, this is like the 200 range. It's at an exhausted point. It's on an hourly. So we could see a reversion to the mean up to 446. And then it will have to decide if it's a trend change and break above that or continue downward. All right, so that is let's take a look at our it had a nice pump. This is flirting with its pivot high. It's staying above the 20 and momentum is above 0. Haven't really looked at ARC in a long time, but these types of stocks are taking off. Let's take a look at Hood really quick. And you can see Hood also coming into 212 is their earnings. So this actually looks like it had a nice pump comparably to the indices, right? Let's go look at some of the bigger names. Look at Google having a bad day after earnings, taking a dive on an hourly. It's exhausted on the down end, but we don't really see a recovery here. We had some basing here for the last 2 days. When you have basing on consolidation for a couple days, you can break above and use this as support, or is it going to break down? And Google broke down, not looking very good. Its next level is at 184. We're almost there. Let's take a look at a bigger time frame. Yeah, it's almost at that one level. And then it looks like we could go down to 178. And you'll notice that next week's weekly expected move indicators actually showing. So right now, what it's doing is it's just monitoring where price is right now. Now, wherever price actually ends up closing, that indicator will calculate the expected move for next week. You can see that the expected move for Google next week is 189, and on the low is around 180. We still got some move to go. And this looks like a nice engulfing candle. We are approaching the 200 on a daily, but we still have room to go. So Google looking weak here. Let's take a look at Apple. Apple, interesting. So Apple ended up taking that big move down on the tariff news. Really didn't get a bounce back. Momentum starting to look weak as it's almost going to cross below zero on a daily, a short-term swing trade for the bears. You can see the indicator. It's not done its calculation until close, but you can see we're around 234 and 223. Oh, that could be a big move for Apple. We'll have to see. And remember, that's the weekly expected move for these stocks. Always nice to go to your trade tab, take a look at the weekly expected move. So for Apple, if we go out 7 days, the expected move is 7 points. So you have plus or minus 7. So that will help you to see the market makers identify, right, what the move is going to be. And it changes basically with the flow. So this is really cool that the platform is already going to tell us what the expected move is. That really kind of, sets your expectations appropriately for the type of maybe trade vehicle or where you're thinking it might be going. So having that kind of identify could be helpful to you as a visual just to see, hey, where are we at? And then you can see with our vertical trend line here, it's been on top of it, on top of it, on top of it. Again, these are all fake out zones. And boy, this would have just, made a trader cry this week. We're underneath the 20 right here. So really going absolutely nowhere until we actually pop above it. That would indicate that we have a possible trend change when you can get above the 20 on any time frame, by the way. So if we can get above the 20 on any time frame, you could start to see this start to recover, right? Start to mend itself. But as of right now, it's not looking good for any of these. On the 4-hour, it's actually breaking down below it, which means that yesterday, it was flirting, trying to break out of it, but not anymore. We also have a dividend on 210. So we can prepare for that. So right now, kind of looking weak on a daily as well as, even if this was for the week, I don't like the looks of Apple at all. All of these stocks really taking a beating, right? The tech. So let's take a look at Meta. And oh, wow, Meta actually outperforming the market right now. You could see that the momentum was high, came down, was kind of in a, just kind of a basing zone right here. And now you can tell that it's kind of cresting above this 100 line. When we see momentum breaking above this 100 line on the CCI as an example, you can really see the momentum start to shift in the stock. Because as you can see, even though momentum has been going low, price has been going high. Now, typically that's a divergence on this longer time frame. But if we take a look at an hourly, you can see how really Meta has, within the last week, has really stayed kind of above this zero line, showing its strength. And today, really just outperforming. So this actually looks good for continuation. However, I have to tell you, What was that? I think Tesla, there was a stock that we took a trade on and it was just outperforming anything on the market. But you know what? One or two stocks that outperform just can't run away from the entire kind of, forecast of what the entire market's doing. So typically, whatever the market is doing, that saying high tide raises all boats, well, it can sink it as well. And so what ends up happening is you have these, few stocks that are outperforming, and you really got to take a look at those sectors and see where they align. If the Qs, as an example, Meta's part of the Qs, if the Qs are not really, the entire sector is down, but Meta's up, I would think twice about it. I've done this several times to test it. And even though we have institutional flow that might be sending money into these stocks, the broad market tends to kind of take those independent stocks at some point and, take it down with it if the market is going down like it is today. So Meta looking good today. Don't know how it's going to go next week. But as you can see, it's already calculating around 734 and also 696. And so depending on where we close today and where we open on Monday will determine, the likelihood. And as you look back, you can see as price breaks the weekly expected move, it often will be bullish for the following week. And they've done studies on this. And this is one of those kind of forecasters that can, kind of help you see. And then if it breaks below, it most likely will start to head. The higher probability is that it'll start to head. But you can see where we broke above again. And we just broke above it this week. So we'll have to see if this level right here at 708 access support. If it does, then we could see a breakout for next week. But we'll have to kind of see it. Now that I've already tried a couple of those types of trades where an independent stock is actually outperforming, I felt like, okay, I think I got this. I don't think I want to mess with that all that much. So anyway, we can see, some of these stocks kind of, let's take a look at some of the market maker stocks. This is interesting. Eli Lilly, right? So now we got some healthcare stocks really taking off. Well, what does that actually mean for the market? When you actually see, SPY and the QQQs go down, but you see, healthcare go up, healthcare, it typically is a reverse, right? Let's take a look at some banks. Banks not looking too bad. JP Morgan. Here's Visa, not too bad at all. MasterCard. This is interesting. So Oracle actually looking pretty decent today. Gas stocks looking okay. So really just kind of J&J, another defensive, right? And this is all because of just forecasting for a recession people are talking about. But when you take a look at like CRM and Microsoft as an example, these are all the stocks that are heading down. And that's not good because we could see a pretty sharp pullback here. We got Google down. Let me take a look. Oh, Amazon not looking good. Apple, APGO was looking good at the beginning of the week, but it looks like it's breaking down as well today. IBM, IBM kind of holding its own here. And that's about it. I'm interested now looking into Goldman Sachs actually looks pretty good. I actually am looking at Tesla for a short. And one of the reasons is I was looking at some of the net flow that was coming in from institutional buying and selling, and I had read a post where there was a lot of institutional buying yesterday, but not today. So that was a quick kind of a change. And you can see Tesla just really struggling to get over its 20. Tesla just seems to be one of those stocks that really has been consolidating for a long period of time, but it's actually breaking down now. And you can see that for the last 3 weeks, Tesla's been kind of in this zone. These yellow bands right here show consolidation on a longer term time frame. And you can see this zone that we've been in. But once we break this, right, this is called Darvis, by the way. It was named after a guy that created this system. But basically, after a consolidation, once it breaks that consolidation, you're heading lower. Those are the higher probabilities, right? And if you break it higher. So they just act as support and resistance, just another way of looking at consolidation and then looking for either a breakout or a breakdown. So here we have on a daily that it is breaking down. So we'll have to see what comes on Monday. But as we look at a weekly, this is really interesting for Tesla. So as we look at a weekly, you could see that, we've been consolidating, but today we're breaking below it. So as we break below 371, this is actually looking more bearish. Now we do have support on a weekly at 353, but that's a long ways away on a weekly, isn't it? So as we look at the charts, we could actually see on a weekly that we are breaking momentum to the downside. So that's looking really weak. I'm actually looking to take now. How about if we take actually, we've been doing a lot of bull trades. This actually looks good on a weekly level as well as a daily level to break the pattern here and go for a weekly. We're going to do a debit spread. Let's see what a debit spread. Let's take a look at that and kind of compare the two vehicles right off the bat for Tesla. Tesla's getting expensive on single option side, right? So if we wanted to take a 1 week out put for Tesla at the 367 level, which is at the money basically, you're talking about $1,065, right? So what we could do here is we could come over here and click this to a vertical. And what you're doing is you're buying a call and you're selling a call, which kind of, gives you a hedge, so to speak. So the movement isn't as fast and you don't get as much reward as you typically would for that long call, but it can still make you considerable income, especially for a small account. You do need a different classification, of course, to buy this from your broker. You got to get spread trading authorization, but you can definitely. By the way, this was from an earlier couple puts that I took on Tesla. That's why I'm looking at it. So, and I think it's got some more downside going. So that was just a 0 DTE day trade going on there. But as we take a look at this, you can see that we're buying the 367.50 put, and then we're selling the 365 put. So we're paying money for this one and we're getting money for this one. And that's why it's only $1.18. So you can then determine your risk. Now, typically speaking, I would typically take a 50% stop loss on these, and it just makes it easy to manage. Now, the other thing is I used to, at TDA, I used to automate my debit spreads there. When you purchase a debit spread via automation, works wonderfully. The problem is the selling. And for whatever reason, when they switched thinkorswim over to Schwab, they have done some updates. I'm not really sure I really like them. So with that in mind, I typically do an OCO, which is one cancels another out for automation. But what's been happening is when there's a volatile morning, as an example, regardless if you're in the money, you're in profit, it will just ding you out. And so after a couple complaints, not only myself, but in our community, once you see that variable keeps hitting and hitting, you could see it, it's starting to change on you based on your own automation experience. Then you just kind of have to go with the flow until they readjust it. So after the complaint, now what I do is I just set my debit spread in as an example, but I don't automate the stop. I'll just check it every once in a while. When it gets to that 50%, I start trimming the position and leaving some runners. If it's a 50% stop loss, I'll just go ahead and close it out and call it a day that the thesis didn't work, right? The forecasting didn't work. So on Tesla today, we're taking puts, which we haven't done together, looking at about $123 for each of these. My real loss to this, I'm expecting, is about 50%. Now, what ends up happening if this completely gaps up on Monday? It's going to surpass my 50%. Nothing I can do with it. It is what it is. That's why you define your risk up front. So I know what I really want to lose on Tesla, but I'm recognizing that I could lose, about $550, $600 on Tesla, it going for $1.25. All right, guys. So we're going to take this and then we're going to go over to our analyze graph and we're going to take a look at this just so that you could see what this looks like. So as we look at Tesla on the analyze graph, we can, let me get rid of any other of these. This one and this one. So now what this is showing is like Okay, here's where the price is right now. And we're really wanting price to continue, right? Going, downwards. And so this blue graph right here is showing kind of like the trade outline in a visual, letting you know that, this really needs to break this secondary line right here. And let me make sure I got this right. I do not. There we go. So as you can see, the second line is break even. This line is when you're actually in the money. And that this second red line right here where you're in the money is right where the crest of this analyzation graph is. Really, we're looking for price to kind of go below that 366.27 level thereabouts, right? And then that would provide us that we're going in the right direction. And as you can see down here, if by next Friday we close anywhere on the opposite side of this line, anywhere in here, guys, right? You could see what the blue line represents right here. Okay. You could see that we make money. But if we end up on this side, right? On Friday, then you can see how this starts to move and you can see the blue line say actually negative. Do you see in the bottom left-hand corner where it says negative 615? So that's what we really want to do is we're taking a chance here to say, hey, look, I think this is going to move closer in here and I'm giving it that opportunity. And this is at the money. Now we could pay a little bit more and be closer to that line as an example. But what the payout isn't as great as it is at the money. So it's almost like, going to Vegas and bet, the when you're betting for the front runner, right? The odds are not as good as you betting for the underdog. Vegas is going to give you more money for the underdog, of course. And it's the same here. So when you're at the money, right, you got a little bit more room to go versus already in the money. So if you're in the money, then your odds are not as good. It's like you being the front runner, basically. All right, guys. So we're almost there. This was a lot of fun to go over the charts. Had an interesting week, very volatile. I can see the volatility continue in this manner. And it'll be interesting to see what Tesla ends up doing because we have a low for Tesla for next week at 347.43 level. So this could be an interesting play. Now, if on Monday we open up higher than where we closed today, that could be an issue. But as of right now, we're staying underneath them. Tesla had a lot of opportunity. Trust me, I've been watching Tesla all week. It's had a lot of opportunity to break out, and it just has not been able to do it. And you can see where 2 days ago we actually hit this low at 363.18. So 363.18, looking for a break below that for a continuation, right? That's the easiest way to do it if you're looking at an hourly chart. Just look back to see what this week's low was. And that's what we're looking for is a break below there. The easiest thing you can do as well, by the way, you don't have to wait for your 50% loss. You could just say, hey, look, if this thing breaks above the 20, uh, I'm going to start to change my mind, right? Especially if we see them starting to break above. So if it breaks above the 20, which is at 375.64, you could definitely program that in. Then you're golden. It'll just get you out with of a loss. You protect it until you're ready for the next trade. All right, guys, remember risk-defined trades is the most important. If you want to check out automation, how you could utilize thinkorswim or IBKR for automating your trades on the weekends, letting them play out, you could go over to tradingmadesimple.org. All right, see you next week.